Talk about another great hack that I just heard that I've been observing and I've been using, and this is to know your signal for where you're gonna get into a trade when you start seeing spikes. Okay, I have this one that is called the five spikes. The five spike is when you have the 1, 2, 3, 4, 5, then the market is gonna come down to 0.783 before it moves back to where it's coming from, or it moves down to where it's going. But now I want to talk about the three spikes first. I'm going to talk about the five spikes in the next video. The three spikes is when you have the first spike, the second spike, the third one fails to break. The first one, definitely you need to know the market is going to pull down back to wherever it's coming from, and there's possibility it's going to stop at 0.783 Fibonacci before the market start moving back. So for example, this is one right here. You can see we have the first spike right here, we have the second spike right here, and we have the third one. What did you see the market do? The market calmed down to break wherever the market is starting from. And where is it starting from? Remember, this is where it started from, because this is where we have the successful movement, which is our 1, 2, 3. And when you look at it, you can see it breaks it. And now when you look at the total movement from where the whole candle is starting from, it will be at 0.78 Fibonacci. So imagine you take a trade at 0.7 Fibonacci right here now. Definitely you're going to make profit, because the market is going to pull back here and give you about $400. That's one example. Let us look for another example to validate what we're seeing. And the crazy part about this thing is it can even happen inside the minor structure. Let me show you one example right here, because we can see under the minor structure the market was creating a structure going up, now pull back here for continuation, or for 0.06 Fibonacci to buy in case you're using that type of signal too. I'm still going to talk about that in another video, but right now I'm talking about the three spikes. Now let's use the minor structure. You can see we have, this is the first movement, you see it, we have, this is the second movement, which is 1, 2, you can see we have 1, we have 2, we have 3. What are we expecting to do? We're expecting it to come and break where this thing is coming from. But because it's not breaking it, what do we have? We have our 4. So since it's not breaking it, created our 4 for us, and we can see we have our 5. And when we have our 5, I told you, when you have 1, 2, 3, 4, 5, definitely the market must pull back down and break wherever it's coming from, and now gives you 0.78 Fibonacci. So let's check it out. If it's going to be 0.78 Fibonacci, and you'll see totally right. So when you do it from here to wherever the market is coming from, you can see exactly 0.78 Fibonacci. So that's another hack when you are taking a buy, but this happens to be in fire, excuse me, let me show it back. This happens to be 5 spike, because it fails to break here, and whenever that is 5 spike, I automatically know the market must fall back. And now the crazy thing about this strategy is they create the minor to create the major turns to another minor to create another major. Let me give you an example. We have one here that gives us this 1, 2, 3. You can see now the moment we have this 1, 2, 3, we have another one that break where the market is coming from, which is here. You can see it now gives us 1, 2, 3, then the market breaks down. If you use the Fibonacci again, I believe it should be within 0.78 Fibonacci. You can see I'm right, is 0.78 Fibonacci we have right there. But the problem with this what will I call it, signal or strategy, is because you need to be, how am I going to call it, you need to be sure, because you're going to be scared. Imagine you see market moving up and you just want to take it sell because you know the market must pull back. It's crazy. People will even tell you, do you know what you're doing? You can see this market is a sell. But one thing people don't know is it's not a sell, because even right there there's what we call invisible sell. This is an invisible sell. Yeah, it's a green candle, but it's an invisible sell, just like we have invisible buy. But that's for another video. I'm going to talk about that too in another video. But right now I just want to show you, when you see the 3 spike, you can see the 5 spike now turn this one into 3, which is 1, 2, 3. Whenever we see the 3 spike, what are we expecting? We know the market must pull back and break wherever it's starting from. Then we need to buy around the beginning of where the market is starting, which is 0.783. And imagine you're trading like that. I don't think you're gonna have to stress, because your risk will be, like you can see, the risk we're taking here is like $10, but see the profit is giving us exactly $500. So, and I think this is the best signal we should be using, so we are not stressed, we are not panicking, and we're not even thinking too much of what's gonna happen in the trade. So you can see 1, 2, 3 breaks beyond. Now the funny part of it is, now we have this 1, 2, 3 that becomes this, we have this 1, 2, 3 that becomes it. Now this has now turned to another minor, because you can now see we now have 1, 2, 3 that form our 1. We can now say this is our 1. Now we have this 1, 2, 3 that forms another hand for us right here. Now we have our 2 here. You can see how tricky it becomes, so you need to always monitor it. Now we can now have 1, 2. Do you get what I'm trying to say? We have 1, 2, 3 that give us our 1. Now we have what? 1, 2, because this is still standing as the movement that beat this one. You see, so we have a 1, 2, but unfortunately we don't have the 3 that created it. And the moment you don't have the 3, now this now becomes the new boss. So let me delete this. You can see this now become the new boss. And how does it become that? Because now you now see, I'm going to show you, be asking me where is our 2, but I'll show you right now. Now we now have our 1. We now have the 4 spike. Remember, these are 4 spike. Let me circle it for you so you can understand. No, let me use it. These are our 4 spike. This is our 2nd spike, and now this is our 3rd spike. Why is it our 3rd spike? I'm going to tell you, because this breaks this but pull back to create an invisible buy. You understand? Create what? An invisible buy. So indirectly now we now have our 4th spike. You can see right here. Let me show you. We now have, this is now a 4th spike. Yeah, you might be saying, but this is red. No, it's not, because this is an invisible buy. An invisible buy indirectly is green. That's why we call it invisible buy, because it's not showing it's a buy. But if you know the strategy, you know this is a buy. And when it's a buy, what are you going to do? You need to wait for, and another thing you need to learn when you're having your 1, 2, 3, 4, 5 spike, you understand, you need to be careful, because sometimes, okay, let's take for instance here now, this is an invisible buy. You wouldn't believe you're going to take a trade here, because you were thinking you're waiting for it to break down. You understand me? Which definitely is going to happen, but sometimes you might be scared and be thinking, oh, when is this going to break out? When is this going to happen? But definitely it will come to play, because you now have a 1, 2, 3. The moment we have the 4 and it fails to break, you are supposed to take a sell right here. You don't take a sell right here. You need to take a sell when it creates a structure. You see, and when you take a sell right here, see how much you're gonna make. I'll show you now. You see, it's gonna give you a cool $500. You can see with this signal, easy $500. It's easy, but you just have to be patient, because you can see 2 hours candle. This might take you from, let's say you have your let me tell you, you have on the 21st, and see when you need to take the trade at on the 22nd. So it's almost like 24 hours. So this strategy demands you to be very, very calm and collected, and you need to be what? To be patient. And whenever you have a 1, 2, 3, 4, 5, what do you expect? The market must go back to where it's coming from. And you can see 1, 2, 3, 4, 5. You see the market start moving back to where it's coming from, just like what we have over here. We have the 1, no, where did I think I showed you one earlier, which is 1, 2, no, 1, 2, 3, 4, 5. You can see the market breaks where the beginning started from and gives us the 0.78 Fibonacci. And now look at it right here. We have 1 2 3, 1 2 3 4 5. Where do we need to take a trade? We need to take a trade around this point, and you can see, let's check the Fibonacci, because this is where the market is coming from. If you check it right here to the Fibonacci, you can see you need to take a trade right here, and we are correct, 0.78 Fibonacci. So I think that's the hack, and that is what I feel you should be doing if you want to take a trade using the 3 spikes and the 5 spike. For the video not too long, I'm going to talk about the 5 spike and in a higher time frame in the nearest future. And see another hack right here. You can see we have a spike here, which is 1, we have 2, we have 3. What do you expect? It must pull back up. And where do you need to sell? You need to sell at 0.8. Let's check if it's 0.8. You can see it's 0.8, even though we are using the bigger one. What you just need to understand, if it's the major, you use the major. If it's the minor, you use the minor. If it's the minor, you use the minor. And I think with that, you're going to be making money using this 3 spikes strategy that I'm teaching you. Shh, let me stop it.